What's up, money team? Gabriel here. I hope that you had a great trading day today. Well, today I want to talk to you about a strategy that can possibly benefit us during earnings on an underlying stock. The strategy is quite simple yet effective. One of the reasons I like this strategy and want to present it to you guys is that it will limit our loss if the play doesn't go as planned. The strategy I will be talking about today is called a strangle option strategy. Strangles are useful when we think it's likely that the stock will move one way or the other, but we want to protect ourselves just in case. A strangle is an option combination strategy that involves buying a call and a put option on the same expiration date. Now, here's the key factors of importance for me on this particular strangle strategy. Number one, the stock must have liquidity, like for instance, NEO, Apple, Tesla, Microsoft, and so on. Okay, it must have liquidity. Number two, you are only limited to your risk to only the amount you purchased the contract for. Thirdly, in order for this to work, the stock must possess rapid movements during the play. Perfect example, earnings day. Okay, if we know, let's say we know NEO, next week NEO is planning to have earnings that particular day, we want to go ahead and enter a strangle play just in case it doesn't go our way. We are anticipating on NEO to move up, but if it doesn't, and if it moves down, and if it moves down rapidly, we can still make money from NEO. All right. Now, here's another good thing too. To exit the play, you can simply do so. However, in a case where it doesn't close within 20 to 30 seconds, personally, that's for me, I cancel the order and I try again with a slightly higher limit price. I like to set my limit price at least $1 more, just so it can get filled. Let me show you an example of a long strategy, strangle play. So let's say we're getting into NEO right now, and NEO is $100 right at the day of we purchasing this particular play. We want NEO to move up, of course, because it's earnings. And usually with earnings, if earnings are good, the stock moves, and the stock moves rapidly. So that's what we are anticipating on. But what if NEO fails earnings and it basically within minutes tank? We want to protect ourselves just in case it does tank, we can still make some type of money. So the good thing here with the strangle strategy, we will buy NEO at $100. The only thing you guys, I would say, not really concerned, but only thing that matters right now is that just in case NEO doesn't move up or down rapidly as we anticipate, you're only losing to what you just purchased a contract for. Now, let's say NEO moves up from $100 to $120. Of course, our break even is 110, so you won't lose anything. But of course, if NEO moves up 115, 120, 130, and so forth, we definitely make money, and it will be unlimited. Same thing goes with if NEO fails earnings and the stock moves down rapidly, we can still make money. Of course, if we break even, if NEO falls from $100 to $90, we will break even and not lose anything. But of course, it goes down to 85, 80, 75, and so forth. We can still make money from that. And let me show you the example here. So let's go to NEO. We are anticipating NEO next week to have earnings. So we want to basically get in this play. We are anticipating on NEO going up. So what I do with the strangle, set up the strangle, I would buy a call, usually around in the money area. I would buy a call, and then I would buy a put just in case. As you can see, my cost would be only $222 to get in the play. Now, if NEO stays around here, yes, you will lose some money, of course, because of theta and gamma and the rest of the Greeks. You will definitely lose some money. But if NEO moves up, as you can see, we will make money. and we will make unlimited money. If it moves up, let's say $44, $5 more, $6 more, we will definitely move up. And our break even is only 40, what is it? 42.22. Now, let's say if NEO goes down, bad earnings, and it starts to tank. If NEO reaches around that 36.78 mark, we won't lose anything. But of course, if it goes down more to 35, 34, and so forth, we can still make some money off of this. So this is a good thing that I would present to you guys during earning calls. All right. So if you want some more information, please don't hesitate to DM me. Any questions you want to ask, please DM me about this particular call so we can get this going right away.